Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Astera Labs.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis.
Okay, so Astera Labs, this is a big one. It's often called a tell, right, for the overall health of the whole AI infrastructure build-out.
That's exactly right. You know, when the hyperscalers are spending aggressively, these are the numbers you look for. And this latest batch, well, it proves that spending is still in overdrive.
It certainly feels that way.
Yeah, and what's fascinating here isn't just that the company is growing. It's accelerating. For Q3 2025, we saw revenue hit $230.6 million.
Okay.
But the headline number, I mean, it's that massive 104% year-over-year revenue increase.
104%. So triple-digit expansion.
Yeah. Exactly. Triple-digit in a field that's already growing like crazy. And they didn't slow down either. They still showed a really strong 20% jump just from the previous quarter.
That kind of velocity is incredible. It really suggests they must be vital to what's being built right now.
For sure.
So what specific parts are pulling the hardest to deliver that kind of pace?
It's really the infrastructure backbone. We saw broad-based strength, across all their product families, signal conditioning, smart cables, switch fabric products. But the real powerhouse here, the thing fueling this acceleration, is their Taurus product line. That's the one that's critical for supporting 400 gig connectivity.
Which is exactly what these huge AI systems need.
Precisely. It's what you need to handle that enormous data traffic.
And it's not just about selling more units, which is key. I mean, in high-tech hardware, you sometimes see this massive growth, but it comes at the cost of profitability. The margins here seem to be the real story.
They are. The 76.4% adjusted gross margin they reported, that is just stellar for a semiconductor company. To put that in perspective, that tells you they have some serious pricing power, that their solutions are, truly indispensable. And that margin was up 40 basis points just from Q2.
Which shows that as they scale up, they're getting more efficient.
Yes, that's the operational leverage kicking in. And we saw that flow right down to the bottom line. The adjusted operating margin hit a record 41.7%.
A big jump.
A huge jump, 250 basis points quarter over quarter. So when a company can grow revenue by over 100% and expand its margins at the same time, the business model is solid.
And that efficiency, like you said, must have led to a pretty big earnings beat.
It did. A fantastic beat.
How big are we talking?
Well, adjusted diluted EPS came in at 49 cents. The consensus on the street was 39 cents.
10 cents. Beating by that much at the stage is a huge signal of confidence.
It is. It just shows that analysts were underestimating the leverage in their business.
When they're guiding for this momentum to just keep going, right? Through the end of the year.
The guidance is very robust. It suggests there's no slowdown in that hyperscaler deployment cycle. For Q4, they're forecasting revenue between $245 and $253 million.
So another healthy sequential increase?
Another 6 to 10%, yep. And they're projecting Q4 adjusted EPS around 50 to 51 cents. The market loves consistency, and Astera is delivering.
Okay, those financials are amazing. But this sector has giants. I mean, Broadcom, Marvell, they have immense resources, you have to ask. What's stopping them from just copying this tech and crushing Astera on price? What's the moat?
This is where the whole investment thesis really anchors. And it's not just about a single chip, it's the platform. Their core value is what they call the intelligent connectivity platform.
Okay.
And this platform isn't just silicon, it's a fully integrated solution. It blends all their semiconductors, the CXL, Ethernet, and NVLink, all that, with their own Cosmos software.
We hear those acronyms all the time, CXL and NVLink. Can you just break down really quickly what problem this platform solves that the big guys aren't solving as well?
Sure. Think of it like this. When you build a massive AI rack with thousands of GPUs, your biggest problem isn't the processing power itself. It's the data flow between them.
The bottleneck.
Exactly. These are essentially the traffic controllers. CXL lets GPUs share and expand their memory. NVLink is for that super high-speed communication between GPUs. Astera's platform is purpose-built to manage all of this at rack scale, to prevent the bottlenecks that just kill AI performance.
So they are the specialized traffic cops that hyperscalers absolutely need to make their multi-billion-dollar AI clusters actually work.
That's a perfect analogy.
Yeah.
And because their solutions are so specialized for these environments, it creates that critical stickiness you look for.
Meaning it's hard to switch.
Very hard. If a major cloud provider has designed its next-gen architecture around Astra's interfaces, the cost and the sheer effort of ripping that all out is just prohibitive. That's the real defense.
Okay, so that protects today's business, but we're always investing in the future here.
Yeah.
What's the product pipeline telling us? Can they keep this lead into 2026, 2027?
They have a very clear roadmap. For 2026, the key driver is the Scorpio X series. That's expected to be a major revenue ramp.
So that's the immediate catalyst to watch for next year.
Absolutely. Beyond that, they have the NVLink Fusion products, which really solidifies their position for, the multi-year evolution of AI. And they're even looking further out.
To the next generation of standards.
Yep, they're playing a long game. We're expecting initial Ulink revenues in 2027, so this constant pipeline refresh shows they're not sitting still.
Good. So speaking of that kind of multi-year investment, let's look at their financial health. You need a big war chest for a tech race like this. How are they positioned with cash?
Their position is exceptional. They ended Q3 with $1.13 billion in cash, equivalents, and marketable securities.
So plenty of liquidity.
Abundant liquidity, and, really importantly, no significant debt. It's a massive cushion.
And the business itself is throwing off cash, too.
Oh, absolutely. They generated $78.2 million in operating cash flow in Q3 alone. And that cash flow is crucial because they are pouring it right back into the business. Purely growth and innovation.
Right.
They're reinvesting aggressively. I mean, they're targeting a 60% headcount growth by year end, all focused on R&D.
And part of that spending is on acquisitions, right?
Precisely. They're closing the X-Scale Photonics acquisition, which will immediately add these critical optical capabilities. As you get to 800 gig speeds and beyond, you have to have that.
You need optical.
You need optical.
Yeah.
And for growth investors, what's key here is there are no signals of buybacks or dividends. The entire focus is on product expansion and defending that moat.
Okay, let's shift to the market. Sentiment around Astera is generally pretty bullish, but what is the smart money actually doing?
The smart money is definitely bullish.
Yeah.
And you can see that in the incredibly high institutional ownership, which is sitting around 60%. We're seeing major names pile in.
Like who's?
Well, you see clear cluster buying. One firm, Highland, upped their stake by nearly 200%. Pacer Advisors took a very large new position. The institutions are loading up. They believe in the multi-year story.
The stock itself has been volatile, though. We saw that gap down after earnings from around 172 down to 166. For a new investor, that can look a little scary.
It can, but the way analysts are reading that is more like constructive consolidation. The thin liquidity you often get at year-end, it's not seen as a reaction to bad news. The guidance was strong. It's just the stock basing before its next move.
So if someone is looking for an entry point, what are the key technical levels they should be watching?
Well, the stock is trading healthily above its long-term moving averages. The 200-day is around a 156.48, and the 50-day at 159.19 is providing good near-term support. Those levels are seen as attractive places to look if we get a broader market pullback.
And we should mention its high beta. At 1.52, this stock really moves.
That's right. That high beta means it just amplifies the upside when the AI sector is in favor. But it cuts both ways, of course. The downside can be amplified too, which brings us perfectly to the risks.
Let's hit the elephant in the room first, that valuation. The stock trades at a staggering premium,
Right.
151 times forward earnings. I mean, that is unbelievable. Why shouldn't an investor just instinctively click sell on that?
That's a perfectly rational reaction. A PE like that suggests a huge amount of future success is already baked into the price. You're not buying today's earnings. You're buying the next 3 to 5 years of projected dominance.
And the risk is if they miss execution even slightly.
That premium evaporates immediately.
So how do you justify holding on to a company with a premium that massive?
The justification is entirely in the execution of that product roadmap and the durability of the moat we talked about. The strong Q4 guide, the runway from products like Scorpio X in 2026, and their indispensable role. Those are the de-riskers. You're betting that Astera will become the Switzerland of AI connectivity.
The essential neutral layer.
Exactly. The one that enables all the biggest players and lets them keep those high margins.
Okay, let's touch on the other big risk that always makes headlines. Insider selling. We saw key executives selling a lot of stock recently.
We did. It's a headline risk for sure.
Yeah.
The COO, CFO, and a director sold about 586,000 shares, which is roughly $89 million over the last 90 days. On the surface, that looks alarming.
So how should you, as an investor, think about that?
Well, analysts aren't really hitting the panic button on this, and for two main reasons. First, a lot of this selling is tied to pre-scheduled plans or just typical lockup expirations after an IPO.
Right.
And crucially, that selling is being heavily offset by those huge institutional inflows we just talked about. Institutional money is buying up shares faster than insiders are taking profits. It's more of an optics issue than a fundamental one.
We should probably also note that the options market reflects that volatility. There's some bearish flow targeting a huge range, with some bets even going down toward $80.
It highlights the speculative nature of the name. It's a growth stock that amplifies both fear and greed, but that strong product roadmap provides the foundation to withstand that kind of volatility.
So let's bring it all back to the investment thesis. If you're holding or considering a position, what are the key dates to circle on the calendar?
The most immediate one is the Q4 2025 earnings release that's expected late February or early March 2026. And beyond that, you want to watch for their participation in financial conferences. That's often where you get those little granular updates on the product ramps.
So what's the final takeaway? Why would you be willing to swallow that huge PE premium for a long-term position here?
The thesis is that Astera Labs is essential for multi-year AI connectivity dominance. Their Q3 results at 104% growth, those record margins, prove they're executing flawlessly right now. The $1 billion in cash ensures they can fund the innovation to keep their moat. But the investment horizon has to be multi-year. You have to be focused on the 2026 product ramps to justify today's price.
So despite that incredibly high PE, the question you need to ask yourself isn't about today's profits, but whether their connectivity platform will become absolutely indispensable to every major hyperscaler in the next 3 years. That's the real bet.
That is the essence of the AI infrastructure play right now. Thank you for joining us for this analysis of Astera Labs. If you found this helpful, please remember to subscribe and tune in next time for more.